Welcome to The Explainer. Today, we are diving deep into a true powerhouse of the global economy, India's massive IT services industry. We're going to pop the hood, see how this giant engine was built, and really get into the secret formula that makes it all run.
So let's just start with a number that's, well, it's almost hard to wrap your head around. Over $250 billion. That's the kind of revenue we're talking about for this industry. Every single year. And look, that's not just some number on a spreadsheet. It's a force that literally powers thousands of the world's biggest companies.
So that's the big question, right? How does this massive engine actually work? That's what we're here to figure out. We're going to peel back all the layers, starting from that huge big picture scale, and then drill all the way down to the secret little formulas that make it tick.
Okay, first up, let's just try to get a handle on the sheer size and reach of this whole thing. Who it employs, how much money it's bringing in from all over the world, and what parts of the global economy it's really propping up.
To really get it, just look at these numbers from the 2023 fiscal year. The industry exported a staggering $178 billion in services. That's huge. But it's not just about the money, it's about people. We're talking over 5 million professionals directly employed. It's an absolute cornerstone of India's modern economy.
And who are they actually working for? Well, the short answer is pretty much everyone. I mean, yeah, banking and financial services, that's the biggest slice of the pie. But you can see right here that this industry is the digital backbone for everything from manufacturing to retail and beyond. It really goes way, way beyond that old stereotype of just tech support.
Okay, so how is all of this even possible? How do they do it? Well, it all comes down to this core concept, this core design called the global delivery model. And I'm telling you, this is the absolute secret sauce behind the industry's success.
So the model itself, it's this really brilliant hybrid system. Here's how it works. The vast majority of the work, we're talking 70 to 80% of it, gets done offshore in India. That's where you tap into that massive, high-skill, lower-cost talent pool. But then you have a smaller, more specialized team that works onshore, right there with the client in their own country, handling all the high-touch project management and strategy. It's the best of both worlds, really. You get low-cost efficiency, but with that essential local, face-to-face service.
So what's the bottom line for the companies that hire them? It's huge. We're talking a 40 to 60% cost saving. That's compared to doing the exact same work completely in-house or in their own country. This right here is the core value proposition that built this entire industry. It's that simple.
Now, having a great model is one thing, but executing it at this kind of scale, day in and day out, that's something else entirely. So what really gives these companies their competitive edge? What makes it all work so reliably?
It really boils down to three key pillars. First, you've got this incredible deep pool of talent, over 4.5 million professionals, and crucially, with widespread English proficiency. Second, there's an absolute obsession with process. Many of these firms hold certifications like SEI CMMM Level 5, which, trust me, is the global gold standard for software quality. And third, you have world-class infrastructure, which means super reliable, super secure connectivity. You put that combination together, and you've got a system that global corporations can bet their businesses on.
All right, now for the part that the financial analysts, the real pros, watch like a hawk. If the delivery model is the engine's design, what are the dials and gauges on the dashboard that show you how healthy a company is? Let's get into the metrics that really, truly matter.
The first, and honestly the most critical metric, is something called the utilization rate. The easiest way to think about it is like the RPM gauge for a company's financial engine. It's just a simple percentage. How much of an employee's paid time is actually being billed to a client? This single number is the key driver of profitability.
And what's really fascinating here is just how sensitive this is. I mean, look at this. If a company can keep its utilization above 85%, it's absolutely maximizing its profits. But watch what happens if it just dips below 75%. You get immediate, serious pressure on the company's margins. Every single percentage point here matters immensely.
So you can see, managing this one rate is this constant, high-stakes balancing act. If you push it too high, you risk burning out your employees. But if it's too low, you're just leaving money on the table. This is exactly why analysts watch this number so closely. Okay, so let's say you're managing your people perfectly. Your utilization is fantastic, but what about a massive factor that is completely out of your control? Remember, these companies are earning money in dollars and euros, but they're paying most of their costs, like salaries, in Indian rupees. So what happens when those currencies go on a wild roller coaster ride? This is exactly why we need to look at growth in two different ways. The first is reported growth. It includes all that chaos from currency swings, which can be pretty misleading. That's why the pros focus on something called constant currency growth. This metric is designed to strip out all those currency effects so you can see how the underlying business is actually performing. It's the true signal of operational strength.
At the end of the day, constant currency growth tells you the real story. Is the company winning more clients? Are they selling more valuable services? It tells you all of that, no matter what the crazy foreign exchange market is doing. It's the signal through all the noise.
So there you have it. We've seen how this incredible industry was built on a brilliant model of global delivery, powered by talent and process, and measured by a few razor-sharp metrics. And it has been unbelievably successful for decades. But now, the biggest question of all is looming on the horizon. As artificial intelligence gets good enough to start automating some of the very work this industry was built on, what's next? And that one question is going to define its entire next chapter.